As an investor with so many different options of stocks that you can buy internationally or domestically, we have to find a perfect way to analyze our stocks quickly because we as investors, we don't have as much time as probably professionals because we probably have jobs, we probably have family life, whatever it is. So we have to find quick ways to analyze stocks to make good judgments on picks. So in this video, we're going to talk about it because Mohnish Pabrai breaks it down for us. So it's important to learn about your process and do what's right for you, as well as learn how other people do their process because their process might help your process on how to analyze stocks, make better investments, and get these 5x's, 10x's in the market. So let's listen to what Mohnish Pabrai says about investing, how to analyze stocks, and how to make sure you're going down the right path to buy a business. This is the section where he talks about circle of competence and how to analyze a business. So I'm going to cut in and out of this topic and let's see what he says and how to analyze a stock. Let's get it.
As far as circle of competence goes, to ask the question is to answer it. So if you are wondering whether something is within your circle of competence or not, the answer is it is not in your circle of competence. If something is within your circle of competence, you would know how to value the business, you would know how it makes money, you would know what is the likely trajectory of that business within some ranges and boundaries. So it depends on the business.
Ask the question about, is this business in my circle of competence, tells you everything. Imagine you asking yourself, do I understand insurance? If you have to literally ask yourself that question, you don't understand insurance. You don't know how it functions. So that's why you have to actually read a lot on the topic if you want to get that into your circle of competence. If someone asked me, oh, do you understand Google? Or if someone asked me, do you understand the business of Google? The first thing in my mind would be like, yeah, of course I understand Google and how it makes money. So it's in my circle of competence. I can answer that question fairly easy.
So usually my most preferred starting point on a company is to see, as you know, I'm the shameless cloner, So the first thing I'm ideally try to do is hopefully someone smarter than me already owns the stock. And hopefully they have made some comments about it.
That is super key. Mohnish Pabrai always talks about shameless cloning, and you have to curate your own list of people that you respect, that you admire, that you would actually kind of copy. When you do find those investments that you can kind of copy, you have to do your due diligence and dig deeper. Dataroma is a perfect site for this. You can actually find your favorite investor and see what they're buying, man. And when you see what they're buying, like let's go into Bill Ackman, Lowe's, Chipotle, restaurant brands. We find these companies, if they look interesting, if they're in our circle of competence, we can kind of dig deeper after we find these investments and look at what they're buying, their activity, what they're selling, their history. Dataroma is an important research tool to use to your disposal.
The first thing I try to look for is who are the shareholders? And usually I don't need to look at the shareholders because usually it is coming through some guy or some fund that I admire, and they have this particular company as a holding. It is ideal for me if there's a write-up on Value Investors Club. So, there are thousands of write-ups on Value Investors Club, and it's a pretty well-curated site. So when I find a company that's on my radar, the first thing I look for is, okay, is there a WIC write-up? And even if the write-ups are old, I will print off all the WIC write-ups with all the messages and all the comments, everything on.
And this is the site he's talking about, Value Investors Club. So you can just search up a company like Oxy and you can find a bunch of write-ups, man. And when you find these write-ups, make sure you're looking at not just the positive, but the ugly. Like some of these, like sometimes you only find buys about the company. You want to find the opposite because you can get into that bias because you're really excited about the company. You're really interested in it. So you're going to look at all these positive articles about whatever company you want to buy. So you have to do the opposite of what you're thinking. Like, look at all the reasons why to sell the stock as well, or why you shouldn't buy it. And that's the thing that I have to learn and I have to get better at too. So you can also look at Seek and Alpha. Seek and Alpha has a lot of good articles, sometimes good, sometimes bad, about different companies to buy. So Value Investors Club, Seeking Alpha. You can also look on a lot of other websites that talk about companies to buy or to sell, whatever it is.
All the write-ups. That's the first thing I want to read because that is giving me a digested, condensed view of the business that would take a long time if I just sat and read the annual reports. This is someone who's already digested a lot of the data, and I can ratify that later, but at least it's giving me a head start. Because the first thing I'm trying to do is anytime I'm looking at a business, I'm looking for a reason to stop looking and take a pass. So the WIC write-ups are designed to help me get to a point where I say, no, I thought this might be interesting, but it's not that interesting, so I can let it go. If I get past the WIC write-ups and I'm still interested, usually if the company is giving us letters to shareholders, and it appears that those letters to shareholders are not written by a PR firm, then not the entire annual report. I'll have my assistant just make a PDF of all the 20 years of letters, 20, 30 years of letters, starting with the oldest one. And then I just read the letters, because then I can say, okay, what were they saying in 95? And then what happened by 2000? What were they saying in 2000? What happened by 2005? I can just see kind of what they were saying versus how the trajectory of the business has gone subsequently. The other interesting thing about reading these letters is
That's going to tell you all about the business and seeing if management is actually trustable. Do they stick to their word? If they don't, then you just discard the business. You don't believe in what they say.
If I am still interested in the business after reading the letters, then I go to the transcripts. So now the transcripts can be a little bit more, it's actually definitely not written by a PR firm, right? Because this is actually investors and analysts asking questions and so on and so forth. So I'm not that interested in the prepared remarks in the transcript, because that will be similar to what's in the reports and the annual reports, because they're controlling that messaging. But especially the companies that don't write their own letters, etc., I'm really interested in the Q&A. And of course, I have to sift through stuff because the analysts will ask some stupid question about next quarter. Do you expect to beat by 1 penny or 2 pennies, and that sort of thing, which is not really relevant. But what I'm looking for is, when different questions are being asked about the business and they're making different comments, I have the full future in front of me, and just how did that unfold? Did they underpromise and overdeliver, or did they overpromise and underdeliver, or are they conservative? Are they aggressive? Those sorts of things. We can then look at the
And that's all about destination analysis that Nick Sleep talks about. Like, where does this company see itself like 5-10 years down the road? And if you go back and you look at those annual letters, or you look at those transcripts and see what they're saying, did they make it? Did they not make it? How did they talk about it? And then if you look at the recent ones, you're seeing the next 5 to 10 years. So looking at those comments, looking at those questions are super key if you're actually a long-term investor looking out 5 to 10 years.
Proxies, because that gives me a good feel for the stock dilution and comp plans and all of that, how that is playing out. And then after all of that, if I'm still interested, then we start plowing into the financials and different parts of the annual report, risk factors, and so on.
With all of that, tell me if your process is the same, if you do the same thing, or how do you do your process? Leave your comments and like this video. Thank you. Subscribe to my channel. Peace.